Let's jump into insurance and legal exposure as well as third-party risk. Will, I'll start with you. What should boards know about their insurance, D&O, cyber, before a crisis hits?
Yeah, I think understanding exactly what your insurance is there to provide and understanding exactly the risk transfer programs that are in place is highly important. But then the more important point is actually understanding where the potential gaps are and where then the potential implications to the people element, the property element, and then potentially the company's revenue, and where those, if an event happens, where the losses could come from, and then also working out how best to mitigate that going forward. So I mentioned earlier that insurance policies and the insurance market is constantly evolving and changing. And part of that, there needs to be a constant review of these insurance policies and making sure that the cover in place is the right cover, and actually looking at the correct limits or deductible levels. So if there is a potential supply chain issue, your loss may not be directly impact to your company, but then actually it might be more of a contingent loss where you can't get a semiconductor from Taiwan, for example, because of issues in the South China Sea. And it's working out how insurance coupled with a crisis responder or the help from a crisis responder can actually benefit a company. And then also there's that risk transfer available there. A lot of the insurance market and the underwriters we're transacting with are currently experiencing a softening. Terms and conditionings are broadening, which allows clients to experience very tailored programs to cover a very broad list of different perils, which is highly, highly important with the sort of ever-changing risk environment that we are currently seeing, whether it's ranging from hurricanes or wildfires all the way to the wars and emerging threats in the Middle East that Dale and Francis have just touched on as well.
The only thing that I will add, and Chris talked about my background of being in-house, actually in the corporate world. I was involved in, unfortunately, a number of significant incidents, but one of the largest that I was involved with, I actually and ran. I spent a lot of time with our treasurer. I spent a lot of time with our insurance people. And one of our responsibilities in the communications was being able to communicate with all of our stakeholders, our banks, and also our insurers. And because there was property damage involving a significant number of people, even though a lot of it was not significant damage, but it did involve a large number of people. So claims went on for some period of time, and the communications, again, this is the external part of the communications. You have to keep all of those stakeholders in mind, including the insurers. And so obviously this is a different aspect of it than what Will was discussing. But we had to be very cognizant of what we were saying about the incident externally because of how that could be interpreted by our insurers and by everyone else, our customers, our banks. And so all of those aspects of communication involving a particular crisis have an effect. And your insurers can react accordingly.